Imagine for a minute that the entire US economy is your local chicken farm. I'm the old farmhand at the gate, and I'll tell you how feeding chickens and collecting eggs can explain money, prices, and policy today. In our story, chickens are businesses and workers, eggs are the goods and services they produce, and feed/corn is like all the money and credit in the system. When the farm manager, the Federal Reserve, adds more feed or takes it away, it changes how many eggs are laid and at what price we can sell them. This all sounds strange, but stick with me, it'll make sense with some real numbers. First, let's set the stage with some facts about our current farm. Think of money as corn we feed the chickens. During the COVID crisis, the Fed basically threw around corn like it was free. Trillions of dollars of stimulus and easy loans flooded the economy. All that extra money, corn, meant folks had more to spend, so they competed for the same eggs. The result? Egg prices and everything else shot up. In fact, U.S. inflation, the general rise in prices, peaked near 9% in mid-2022, the highest in about 40 years. That was like suddenly doubling the amount of corn and seeing egg prices skyrocket. By early 2025, though, inflation had cooled to about 2 to 3% per year as the Fed pulled back on the corn supply. The Bureau of Labor Statistics reports that by March 2025, the overall consumer price index was up only 2.4% year over year. In plain terms, eggs and all our grocery items are rising in price, but much slower now than back in the inflation spike of 2022. Our country's workers and households also got more corn income during this time. The median U.S. household brings in roughly $80,600 per year in 2023 dollars. On the farm, that means families can afford a decent coop and some fresh feed. Wages have been rising too. The Bureau of Labor Statistics says the median full-time worker's weekly pay was about $1,194 in Q1 2025, roughly $62,000 per year, which was about 4.8% higher than a year earlier, while inflation was only 2.7% in that period. In other words, workers on our farm got paid a bit more faster than prices were rising, which is good news. The job market is also in pretty good shape. Unemployment has been stuck around 4.0 to 4.2% through late 2024 and early 2025, which is low by historical standards. So most of our farmhands have jobs, and they're earning more than they did before. Let's talk about the eggs themselves. That's all the food and goods we buy every day. One striking example: egg prices. Remember at the grocery store when eggs were suddenly way more expensive? That wasn't your imagination. According to BLS data, the price index for eggs jumped about 60% over the year to March 2025. In practical terms, a dozen eggs that cost around $2.70 in early 2024 ended up selling for over $6 by early 2025. Yes, you read that right. Egg prices more than doubled in some areas, partly due to bird flu that cut supply, but also because of all that extra corn money pushing demand. This surge in egg prices helped push overall food prices up about 3% year on year by March 2025. Other staples like meat and gas also spiked in 2022-23, but by 2025 those pressures eased. Energy prices even fell a bit in March 2025. Still, the lesson is clear. When money is plenty, the cost of basic goods, even something as simple as a dozen eggs, can take off. This farm analogy works. Too much corn and too many eager buyers meant I could raise the per-egg price sharply. It's the same with our real economy. More dollars chasing the same goods means higher prices. Thankfully, now that inflation is down near the Fed's 2% target, our farm life is a bit more predictable, although chickens and consumers still feel the pinch of higher costs than a couple years back. As I said, life on this farm has some upsides too. With unemployment low and robust demand for labor, U.S. wages have been climbing. The median full-time worker is up to about $1,194 a week, which is a solid jump from a few years ago. The Census Bureau tells us median household income is around $80,600, up about 4% from the previous year, marking a real increase, adjusted for inflation, not seen since 2019. On the farm, that means our hens, workers, are well-fed and earn enough to afford things like feed and shelter. Speaking of shelter, housing costs on the farm have been climbing too. Every farmer needs a barn, right? In the U.S., house prices have kept going up over the last couple of years. For example, the median sale price of an existing home hit about $403,700 in March 2025, the first time ever it topped $400,000 for that month, and up about 2.7% from March 2024. This is a record high, meaning barns are more expensive than ever for American families. Rents and owners' equivalent rent, a measure of housing costs, are still rising on the order of 3 to 4% per year, even though that is the slowest pace in several years. In farm terms, property on the homestead is valuable. The Federal Reserve says the total U.S. real estate stock is on the order of $52 trillion. It's a big asset, but it also means every farmer, homeowner, is paying higher costs for their coop. On our farm, if we want a new hen house, it costs a lot more corn than it did 5 years ago. Yet, interestingly, mortgage trouble is low, housing is expensive, but people generally are keeping up, in part because their incomes and home values have grown. Still, those high prices can crowd out first-time buyers, which is why tight mortgage rates have slowed some sales. All right, now for the farm manager himself, the Federal Reserve. During the big inflation spike of 2022 and early 2023, the Fed realized it was overfeeding the chickens and egg prices were out of hand. So, it started pulling back on feed. In interest rate terms, that means the Fed sharply raised its policy rate. By May 2023, the Fed had set its federal funds rate target up around 5.00 to 5.25%, up from near zero in 2020. Think of this as charging more for the corn you borrow. It makes everyone slow down. Since then, inflation cooled, and by 2025 the Fed has paused rate hikes. The effective federal funds rate was roughly 4.3% in early 2025. In farm terms, after lots of free corn, the price of a scoop of corn shot up, high interest, so farmers feed their chickens less aggressively. That's helped egg output, economic growth, slow a bit, and cooled off price spikes. The Fed's actions mean that loans for houses, cars, equipment cost more corn, so people borrow less freely. This is intended to keep inflation, egg prices, from exploding again. So far it's working. Inflation is near the Fed's goal, and the economy is chugging along without big surprises. One more plot twist. Our farm also has a kind of barnyard stock market. Over the past year, investors got pretty happy. The S&P 500 stock index, think of this as a share of all the big farm businesses, was up over 23% in 2024. That's like getting a 23% bonus on all the farm's profits, mostly thanks to big tech and other large companies doing well. It was actually the second straight year with over 20% gains, which is the first time that's happened since the 1990s. In chicken farm terms, our farm savings account, and even some of the barns, turned out to be worth a lot more. Of course, markets can always go the other way, but for now investors have been pretty bullish. So what's the moral for our American chicken farm? Over the last few years, we've seen a lot of inflation, egg price spikes, followed by heavy-handed policy, cutting back on feed/cash, all of which has brought prices back down toward normal. By early 2025, price inflation is modest, 2.4% annual, wages and incomes are up, helping families fill their coops. Interest rates are in the 4 to 5% range, and housing has reached record high prices, around $400,000 median. Meanwhile, the job market stays strong with unemployment at about 4%, and stocks have had a banner couple of years. As a story, that means our farm is balanced on a knife edge. We're getting good output, but at a higher price. The Federal Reserve is watching those chickens closely now, trying not to overfeed them again. For everyday Americans, it feels like groceries, like eggs, got expensive, but your paycheck is a bit bigger and loans cost more corn interest. We Americans tend to like our storytelling with a happy-ish ending. Today's farm story is that the chickens are still laying eggs, the barn is standing tall, but the era of cheap feed is over. And as always, we'll keep a close eye on the coop to see what happens next.